Good morning. This is Ken Long and Tortoise Capital with the first of two quizzes for today, where we're going to take a look at a couple trades offered by chat room members to see what we can see from an after-action review. And so the first one we'll take a look at here is Procter & Gamble on a daily chart. Here's the opening. And we see that from the previous day, it's in a downward trend. Minor gap down and sells off sharply, and then no additional follow through for more than 10 minutes. We end up seeing the trade that was taken was an owl pattern with an entry here when the RL10 crosses the dragon, and takes an exit after an RLCO outside the river, and really finds the exit at the edge of the river for a 0.75 R gain. This is perfectly planned and executed by the numbers. For other comments, we might look at whether or not there was a hybrid frog available here, that when you get a sell-off into the close, a gap down and immediately selling off, there might have been room on the downside here. So if he's managing 15 cents, a 15-cent move from 90.45 to 90.30, we may have seen a hybrid frog entry right about here that probably would have scratched because of the failure to follow through. A second one where we say a collapsing dragon, if we go below the RL10 and come across this 1, 2, 3 here, may have triggered an entry. If so, a reversion back here, 1, 2, 3 to the upside, would have caused a scratch or a minor loss. But the owl was perfectly executed, and this is really the argument for the owl, that you have the RL270 acting as a longer-term fair value or a retest of the gap opening. So getting back to yesterday's close is a reasonable target, and so the owl is right in the middle of that move. It's a measured move. You have enough evidence that the reversion to the mean has occurred, that a bottom is put in, and then the exit is just perfectly planned and executed. So well done. Now here's one that gives us a series of 4 trades, and we're looking at XIV on 1 minute, so it's also in a downtrend. There's the opening of the day, the blue line. You can see the hybrid frog box here, which is from 74.25 to 74.50. So we're looking at a 25-cent hybrid frog box. We get the open. The entry is here after it moves 25 cents from the opening. We get a little bit of follow through, but on the second test down and a resumption, 1, 2, 3 exit, fractional gain. That's a nice way to get the day started. It's a stop and reverse because now we have an owl pattern where we had the measured move, the unambiguous move down, and I include yesterday's move in that because there was no gap, so I just see this as a continuation. So entry, when you have unambiguous move, RLCO outside the river, RL10 crosses the dragon is rolled up, the 30 is rolled up, that's the automatic entry. Gets up to Z3, I wouldn't argue against an exit here. We end up getting an exit about in that same location yesterday along the 270. This gave us a little more opportunity to take advantage of the next leg, but it still preserves a very nice move because we have an automatic upward bias because of that owl, because it's gotten up to the 270 in fair value. We buy the continuation in a pocket. That doesn't follow through, so we scratch that trade. I still have a long side bias, so I don't take this trade, and now I get a pocket on the next one where I have a low, and then a higher low, and then I have an upward bias, and then this is right where the opening was, so I'm going to give it a try that way. No follow through 10 to 12 minutes later, so we go ahead and scratch that. So we have a fractional gain, a nice win, a scratch, and basically a scratch. And so this really shows all of the patterns in the morning session that we typically are using. If this owl had failed, like if it had come below the belly of the dragon, then this would have been a stop and reverse, then that would be a P1 failure, and then we would expect the leg moving down to be as large as the initial sell-off. So that's our 2 after-action reviews, looking at the game film, looking at the game tape to improve our technique, not only examining the trades as taken, but also looking for other opportunities that are available and in order to deepen our understanding of how all these patterns fit together. So that's Ken Long from Tortoise Capital and the chat room laboratory. Thanks for hanging in there, and we'll see you in the chat room. Keep your wrist measured and your powder dry.